Well, hello, happy Tuesday. Due to technical issues, it's been hard to go live on my page. Facebook has blocked a number of pages from the ability to go live. So I'm going to record this and upload it. Um, so hello, my name is Sarah Page. I'm the owner of SAP Virtual Resources. I offer virtual accounting, bookkeeping, and payroll services to small businesses. A lot of the clients I work with are in the construction trades. So about me, I have 25 plus years of accounting experience in the private corporate sector. A number of those years was in newspaper advertising, which I know is a dead industry nowadays. But then I had over 10 years in mechanical construction, as well as some years in oil and gas, janitorial supplies, and have enjoyed learning and growing through all of it. So today, what I want to discuss is what types of business structures are available. Everyone knows about the LLC, but it's not just an LLC. So to start from the simplest to the most complicated, your simplest is a sole proprietor. It is you, it is only you, and you have full control of how that business runs. The drawback is you also have no protection. So from if you have debts or losses, your personal assets can be taken to cover those. So you don't have that protection. There's partnerships, and that is where two or more people get together, they share their resources to start a company. And you can get a lot of experience, a lot of great brainstorming to come into that. The drawback is if you end up not agreeing, it can cause some turmoil in the business, some push and pull, and could make life not enjoyable. And again, a basic partnership, you don't have that protection of the LLC. So the next step up is the LLC, which is a limited liability company. Now you can be a sole owner of the LLC. So basically the sole proprietor gets an LLC and that gives them protection to separate the business and the personal. One caveat I want to throw in there, and it counts for the partnership LLC as well. Keep your business and your personal finances separate or you could lose that protection. If you're always running your personal expenses out of that business account or vice versa, the IRS can say, you know what, we don't see that there's a difference. And we're going to act as you have acted and not have that difference between. So you can lose that protection. And then you have a partnership LLC, or sometimes they are an LLP, which is limited liability partnership. And again, it's set up just like the partnership, but you have that protection where if the business suffers a loss, debts, they're sued for anything, they can't come after your personal assets. Again, keep the business and personal finances separate. Then you have the ability to have an S Corp. So an S Corp is your limited liability company, whether it's the sole proprietor, whether it's a partnership. And this gives you the ability to be taxed as a corporation. So it allows that liability for the business debts and losses to be separate. It's more complex to set up to a point. There's some paperwork you have to file with the IRS saying, I now want to be taxed as an S Corp. But this allows the owners to be paid as employees, which you can't do in the LLCs, which that are sole proprietor or partnership. You have to have that S Corp in order to pay the owners as employees. And what makes that wonderful is then instead of the income taxes that the owners or partners are paying out of their personal funds, now they are having payroll taxes withheld, and that can be expensed through the business. So that's one of the big caveats. I would not recommend it until you are making a decent amount of money. I've talked to tax people, some say 40,000 in net income, some say 100,000 in net income. So it depends on what you feel comfortable with. And check with your own personal tax preparer. They might have some really good recommendations based on your particular business. And then you have your C corporation. That's the big one. That one, you have a number of shareholders. Even an S corp can actually be set up the same way. The C corporation, the expenses don't pass down to the individual owners. It is its own entity. Now, an S corp at a corporate level, where you actually set up as an S corp, not just are taxed as an S corp, that one also it'll have shareholders but it still will pass the expenses to the owners. So it has some of the corporation and some of the LLC, but with the corporation costs to set up. Whereas if you just file to be taxed as an S corp, you don't run into all that extra expense, but you get to enjoy the tax benefits of an S corp. Hopefully that made sense. And then the last one that you can have is a nonprofit. So a nonprofit gets people confused. It is eligible for tax exempt status, and you can accept donations, volunteers, because if you filed your taxes, you know that if you give your friend money to help them out, that can't be taken on your taxes if you itemize. You have to itemize to take any donations. But if you're donating to a 501c3, which is a nonprofit, that is the IRS code. That's how they got their number. If you're donating to them, you can deduct that on your taxes when you itemize. So they have that tax exempt status where they don't have to pay taxes. They still have to file paperwork though. You still got to tell everybody what you're doing in the government. You don't have to pay the taxes on it though. Now, the reason it's called nonprofit, and this is where people get confused, they are allowed to have a profit. They do not have to run their business at a loss. They simply cannot pay that profit out to the members. In a corporation, it would be a shareholder dividend. In the LLC, the partnerships, the owner, sole proprietor, it's taken as an owner draw. But with a nonprofit, it has to be reinvested back into the business itself. So you can't pay out a profit to the members, the owners, the shareholders, whoever is involved in setting up that business. So hopefully that gave you some information about the different structures that are out there and gives you an idea of what one could work best for you. Most of your small businesses, you're going to be the sole proprietor, partnership, an LLC of one of those, or you get big enough that you're going to be filing as an S corp. You're not so large yet that you need to set up an actual corporation. But if, let's say, you want to look at doing scholarships or doing some kind of community help where you want to start a nonprofit, something that I could look at doing as a bookkeeper accountant is I could be offering a scholarship to the local community college. And so those donations and things that would come in to help build up that scholarship money, it all would have to stay in that nonprofit. So you could have multiple. You could have an LLC with a nonprofit. You could have an S corp with a couple of LLCs under it. There's a lot of different ways that you can make that work. The best way, if you aren't sure what to do, and it can get very confusing, is to reach out and ask questions. Talk to your tax preparer, If you want, I will put my link to my calendar scheduler here below. Contact me. We can brainstorm and come up with some ideas. So have a great Tuesday.